Welcome back to the channel Trading Simplified. I'm a trading enthusiast and love to simplify trading. To get started, just a reminder that I'm not a financial advisor and this video is for entertainment purposes only. Welcome back. So today I want to discuss dividend stocks or buy a dividend ETF. You could buy dividend stocks such as ATNT, for example, but then you have to take the chance as if, is the stock going to continue to appreciate over time, or are they going to make decisions that are going to cause their stock price to decline over time? So for example, AT&T is worth $41 when it was 2016. But as time went on, you did receive dividends, and they are one of the highest paying dividend stocks. But the share price depreciated to $27.56 currently right now. On the other hand, you have Coca-Cola looking at the 5-year chart. If you were to dividend cost average them and started buying at $42 a share 5 years ago, you would see that the share price, while receiving dividend, has appreciated over time. So it's all about choosing which is the right stock to invest your money in over the long term and trust that they're going to continue making money as a business and paying you as the shareholder. So this brings up the question, should you invest in individual stocks and hope that it goes up over time, or should you choose an index ETF and just put the money in every month and forget about it? For me, this is a very easy decision. I choose to invest in SCHD, a dividend ETF that over time I put money in every single month and I receive dividends, and I just forget about it and I'm going to hold it for the next 20 to 30 years. So this is my top number one choice for a dividend ETF. It is SCHD, the Charles Schwab US Dividend Equity ETF. And there are many reasons why I choose this. The first reason why I choose this is that this investment, SCHD, closely follows the Dow Jones US Dividend Top 100 companies. So when you look at it, it's investing mostly in the United States, 99% in the top country. And then when you go down to the holdings, you can see that their top 10 holdings are going to, out of 100, 41% of them are in these top companies such as Pfizer, Cisco, Pepsi, Coca-Cola, Verizon, Home Depot, companies that have been around for a very long time and companies that have been proven to pay dividends. Now, I just like the all-in-one basket because I can just put the money in and I don't have to worry about, is Coca-Cola going to go out of business in 10 years or is Pfizer going to go out of business in 5 years from now? And if I invested individually in those stocks, they could potentially be worth nothing and all those dividends didn't matter. If one of these companies does not do well, they're just going to replace it with the next one that pays well and that is continuing to grow. So for me, simplicity is always key when it comes to investing. Okay, so number two. The second reason why I really love this dividend ETF is because of the expense ratio. It's 0.06, so it's a very low expense ratio. So that means that's the amount of money that you're going to pay this fund for owning them. Every single year you have to pay a fee for owning them for the simplicity of having these 104 holdings. Now, that expense ratio, 0.06, you can see it down here. It's comparing all different ETFs, and it offers a 0.06 net expense ratio. Now, when you compare it to other ETFs, such as CDL or DVY, VYM, you can compare the expense ratios. This is the amount of money they're paying each year, the shareholders pay, just to be a part of their ETF dividend fund. So you can see 0.06 versus 0.35, 0.39, 0.38. Those are very high expense ratios to pay for something that you are paying to get passive income. The goal when it comes to investing in these types of ETFs is to get nice passive income that grows over time. The third reason I like SCHD as my top choice for a dividend ETF is when you look at how is it performing. You can look at the 1 year it's up 40% in total returns, including what you're getting with your dividends, and when you compare it to the Russell 1000, it is beating them, it's outperforming them. The life of the fund is up 15.52%, which is excellent. And now what I want to do is I want to jump into the chart and I'm going to talk about why it's smart just to put the money in every month and try not to time the investment. So using the Webull platform, I like to use this to look at the investments. And right now I'm focusing on the 1 year return for SCHD. So you can see over 1 year, it was around $67 a share and it's went all the way up to $77. And then if you look back in perspective and you go to the 5-year chart, it's like, where would you want to buy specifically and then watch it go up. Obviously, you'd want to buy down here where it was worth $40.46. Now, this was during the COVID pandemic, when the stocks really crashed down, and that's not always going to happen. So even if you were to just buy this for the last 5 years, put the money in every month, every 6 months, whatever it is you like to do, and you receive that 3% dividend, you'd be buying in the 51 range. I'm looking over here. You're buying in that 45 to 51 range. And yes, you did have a drop for a small temporary time being. I mean, it was only for about 3 months that it dipped all the way from $58 down to 46. I'm sorry, 38. 38 is the low. But then over time, it just kept growing and growing. So when I buy dividends, I'm not buying to try to time the market. Clearly, you don't want to always just buy at the tippy top and buy $75 a share, etc., and then if it dips. But if you're looking at a long-term perspective, this is over 5 years, you could have been buying in this range, the 50 range, for a couple of years. But as long as you can keep that long-term outlook, I mean, anybody who started this fund years ago, I mean, you could see that this ETF, dividend ETF, used to be $26 in 2012. You can see it down here. I'm circling it. You can see in 2012, it was only $26 a share. Now, if you just kept investing in this over the last 8 to 9 years, your money is virtually doubled because it went from $25 all the way up to $77. So when I look at dividend ETFs, I just want to put my money in and forget about it. And I just want to reinvest those dividends right back into the fund and just let it continuously grow. And this is why I personally love this fund, because you're only getting a 0.06 ratio and expense ratio that you're paying, and you're receiving the 3% a year plus whatever it does growing wise. So the price went all the way up from 25 all the way up to 77 already. So this is my number one choice that I use when I am looking for a dividend return over time. Now, this is a 10, 20, 30-year investment. I'm not looking to buy this and sell it the next day. I just keep putting the money in and I just forget about it. So SCHD is my number one choice. I would just like to thank everybody for tuning into the channel. If you feel like you learned something, please subscribe, hit that like button, and refer to my other videos regarding easy index funds that you could invest in over the long term.